Hello YouTube, this is Financial Ben with thefinancialsurvivalist.com. Just wanted to check in to comment on QE3. I'm a little late, but better late than never. And also I wanted to comment on a previous video I did, why the Fed is not worried about inflation. Anyway, inflation's bad. Don't get me wrong. Like in the previous video I mentioned deflation versus inflation. Deflation is a lot worse than inflation for several different reasons, but the main point I was making is a healthy economy, thriving economy, can have 3 to 5% inflation and be perfectly normal. 3 to 5% deflation would not be present and would not result in a healthy economy. It just doesn't work that way. Now, quantitative easing, i.e. printing money. The Fed is printing our money. I'm sure you're aware of that. If you're watching this video, you know what it is. What scares me about this is a couple of things. One, they said they'd do it indefinitely. And two, after QE1 and QE2, there was a positive reaction with the stock market. Stocks went up. And it's mostly psychological. A little is also knowing that the businesses will hopefully be able to get free or cheap money so they can expand, which would bring up their stock price. But after QE3, I mean, the market went up a little bit the first day, the second day it went down. It's not really having the same reaction as it has with the QE1 and QE2. The market's not just going skyrocketing up to nowhere. It's just not having the same effect that it used to. And that's the scary thing, because the Fed said that they would print money indefinitely until they achieved the result they wanted. The quantitative easing or printing money has lost its effect on the market, and it's not having an effect on the economy, which means that they're going to print money indefinitely trying to achieve a goal that they can't achieve, and that's scary. If you know anything about the Weimar Republic, that's essentially what when they said, okay, finally, we need to turn on the printing presses and print until we have enough money. That's where hyperinflation started. That's where things got out of hand. Now, like I said before, there's a lot more to inflation than just the quantity of cash. So is this going to lead to hyperinflation? I don't know. There's a lot of different factors. I mean, the Fed might be able to pull the cash back in. There's China. There's Europe. Relatively, the United States still is a safety for investors, I guess. So I don't know if it'll lead to hyperinflation. I'm betting it will lead to serious inflation. I don't know when that'll happen either. Just depends on a lot of stuff, but it's not going to be good. Inflation is bad, as well as deflation is also bad. Just wanted to clarify that. Thanks again for tuning in. This is Financial Ben with the Financial Survivalist. I hope I didn't bore you.